Australia's Foreign Minister will fly to Beijing today, marking a sharp improvement in Australia-China relations. A new pokies tax sends the Star's share price tumbling 18%, and one of the oldest retailers in the country, David Jones, has new owners. It's Tuesday, the 20th of December, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. How are you?
You know what? I'm actually pretty good.
Why is that?
Well, I'm just gonna get a free plug in here.
Yes, please do. Here. This is exciting news, everyone.
Well, yesterday afternoon, I received a delivery at my door, and it was the first time I have ever held the hard copy of my upcoming book, which is due out. It's coming out in Australia next year in March, and in the United States in June of next year. Yes, I need to get better at this promotional stuff, don't I?
You do.
It's called How to Be Remembered, and it's a novel being published by Allen and Unwin here. And I held it in my hands for the first time yesterday afternoon, and just to take it out of the box and see the cover and be able to flip through the pages and go, "Wow, this is cool."
Yeah, that's fantastic. Anyone that wants to pre-order, I've pre-ordered mine through Booktopia actually. But it's really exciting. You've put a lot of work into this effort. You've done the show as well as write the book, and it hits us in March. Yeah. Can't wait.
And it is, as I say, the perfect Christmas present, because what's more Christmassy than the promise of something that's
3 months away?
Exactly. You will be single-handedly spreading that Christmas spirit all the way into the new year.
So yes.
What's better than that? So look, you can head to michaelthompson.net.au. That's michaelthompson.net.au and pre-order, or just even have a look at the front cover if you like, because I'm actually really proud of it. So it was just a very exciting afternoon for me yesterday when that arrived. So thank you, Sean, for the allowing for indulging me with that for a couple of minutes.
You are a modest person, Michael, and I'm surprised you actually talked about it so much. But yeah, please go. Michael, what is it? michaelthompson.com.au?
No, michaelthompson.net.au.
.net.au?
That's
go
right.
Order the book.
That's right. How to Be Remembered, and you'll see it on the shelves in March. And I'm now kind of picking the narrator for the audio book as well. And there's some more very exciting news to come soon.
The great thing about having a friend who's written a book is that when I read it, and you haven't told Adam or I anything about it, like you've been very private about the content itself, we're all going to be looking for just traces of ourselves in it.
Well, you won't have to look too hard to find a trace of you, because there is a character in there named Sean.
Oh, really?
Yes. I started writing this at the beginning of 2020, before you and I had started working together. And I suspect it was because I knew who you were, and we were starting to talk about kind of starting up Fear and Greed, and I was searching around for a name, and I thought, Sean's a good name. Little knowing that here we are a few years later, and there is a particularly foul-mouthed character named after you.
Oh, excellent. Excellent. That is good news.
Yes, indeed. Now, we had better get on with the program, because there's a bit to get through today. You've got an interesting chat coming up with John Mayer, the Chief Investment Officer of ETF provider Global X.
Yes, we talk all things ETFs, about how they performed this year and what about next year. And we go through some of the Global X ETFs and why they've put them together, and kind of the principles and the strategy behind investing in an ETF rather than something else. Really interesting chat with John. Nice fella.
Yeah, really, really interesting. It's coming up later on. The main story, though, this morning, Sean, relations between Beijing and Canberra have improved markedly, with Foreign Affairs Minister Penny Wong today heading for an official visit to China, which is actually the first ministerial visit, would you believe, in 3 years.
It's a long way from the previous government complaining that no one in China would answer phone calls from Canberra.
Just a little bit.
Senator Wong will visit Beijing to mark the 50th anniversary of diplomatic ties between Australia and the People's Republic of China. Of course, that was under Gough Whitlam. It suggests that the freeze has thawed somewhat. The visit raises hopes that China may soon end its trade strike against about $20 billion worth of Australian exports and release 2 detained Australian journalists.
So, Sean, clearly this is important to Australia, but how important is it to China?
Well, Beijing wouldn't have invited Senator Wong if they hadn't wanted to improve relations. Remember, the country relies heavily on Australian commodities, particularly iron ore, as well as things like education. So the visit will signify some normalisation of relations, just some, not total, just some. Now, often these visits are also important internally because they demonstrate to the populace of China that Australia, once again, is visiting Beijing. That's a very good thing, and that's often more important, the internal ramifications rather than just the straight out external ones. Senator Wong will be meeting China's Foreign Minister Wang Yi for the 6th Australia-China Foreign and Strategic Dialogue. The last time an Australian Foreign Minister visited China was in November 2018 when Maurice Payne visited Beijing and Mr. Wong, and the last minister visit was then Trade Minister Simon Birmingham back in 2019.
Sean, is it realistic to think that China might actually back down on some of the sanctions against Australian exports?
Yes, it is realistic, though everything happens very, very slowly. Remember, Beijing was furious at the Morrison government's call for an international inquiry into the origins of the coronavirus that triggered punitive tariffs and de facto bans on products including coal, seafood, wine, meat, timber, barley got caught up as well. Chinese officials and state media regularly denounced Australia. There was absolutely no high-level contact. But since the election of the Albanese government, the relationship has undoubtedly improved. Senator Wong going to Beijing is definitely a big step forward.
It's a big political story. Just as you think that things should be kind of winding down for the year, this one lobs in the week before Christmas.
Yeah, it's great, isn't it? I mean, you really want the news to keep giving, and it is.
You certainly do. All right, local markets. What happened yesterday?
S&P ASX 200 finished the day down just a touch to 7,134 points. Not a bad effort given Wall Street fell over the weekend. It was a very poor day for the banks, with Commonwealth Bank, National Australia Bank and Westpac all ending lower. Blood Plasma Group CSL dropped more than 1%, while Brambles, Goodman Group and Aristocrat Leisure were all down closer to 2%. The biggest loser today was the Star Entertainment. More of that shortly. BHP was an outperformer, as were Woodside Energy and ANZ. Plenty of corporate news around. Cooper Energy has appointed a Santos executive, Jane Norman, to be its next chief executive. West Australian gas player Strike Energy has launched a higher takeover bid for in-demand target Warrego Energy as it goes head-to-head with Gina Rinehart's Hancock Prospecting for control of the Perth Basin producer. Now, Warrego's share price jumped 7% yesterday. Andrew Forrest private company Tattering has upped its stake in Mincor Resources. Media reports say that Tattering is sitting at about 19.9%, just below the takeover threshold. Mincor's share price was up nearly 4% yesterday. Synlait Milk's share price fell nearly 3% after it reduced its forecast base milk price this financial year because of weaker global demand. And finally, Michael, the chief executive of gold miner Newcrest, Sandeep Biswas, is retiring. Newcrest's share price fell 0.3% yesterday.
And international markets?
Look, gold is back winning friends. The precious metal is considered a store of value, somewhere to park funds in tough times. It hasn't always played out over the past couple of years, but it seems to be heading back that way. The price of gold is up about 10% over the past 6 weeks, trading around US $1,800 an ounce. Yesterday, ANZ Research put out a note saying the precious metal could hit $1,900 US next year. ANZ says higher interest rates and inflation are likely to slow economic growth next year, which is a positive backdrop for gold. The other one I just want to mention is oil prices. They're up again after China pledged to revive consumption as COVID zero is abandoned. Also, President Joe Biden outlined a plan to refill the US's strategic reserves. Hence, oil prices rose.
All right, there's a bit going on. We'll be back in a moment with the rest of the day's business news. Sean, the Star Entertainment share price tumbled 18% yesterday after the New South Wales government announced changes to taxes on pokies.
That's right. Over the weekend, New South Wales Treasurer Matt Keane said poker machine taxes would be raised to match those in Victoria and in pubs and clubs in New South Wales. So they're the taxes on the casinos' poker machines. The equalisation of tax rates is estimated to cost Star about $120 million a year. Now, the changes will apply from the middle of next year. They'll also hit Crown's Sydney casino. Of course, Crown is now privately owned. In a statement to the ASX, new Star boss Robbie Cook wasn't happy, saying it was unclear why the state government doesn't think the casino group is paying its full share of taxes. Fair enough, but given what's being revealed this year as to what happened at the casino, the Star is unlikely to win much public sympathy. Anyway, shareholders weren't impressed. That's a lot of money, $120 million a year. Its share price was down 18%, as you said.
Yeah, that is a big whack. Sean, you know how pokies, the nickname for them used to be one-armed bandits.
Yeah.
Now they don't have handles anymore. Do they have a new nickname?
No armed bandits.
Is it? Push button pirates?
Push button pirates, that's not bad. Yeah.
Yeah, we'll see. We'll see if that kind of catches on. It's unlikely, but we'll see. Now, Sean, we mentioned this one at the top of the show. Sydney-based private equity group Anchorage Capital Partners has bought 184-year-old retailer David Jones.
Yes, according to reports in the Financial Review, DJ's owner, Woolworths from South Africa, and the private equity group Anchorage have formally agreed to terms and exchanged contracts yesterday morning in Melbourne. Apparently, Anchorage faced some last-minute competition from Teo Capital. Now, that's a family office of billionaire David Teo. He's the founder of TPG Telecom. That was a left field bid, Michael. Anyway, didn't get across the line. Anchorage will now own DJs. The deal is expected to deliver between $500 million and $600 million to Woolworths investors, including proceeds from the sale of the flagship store on Melbourne's Bourke Street.
Sean, auction clearance rates over the weekend fell to their lowest level since early July.
Yes, I feel like I'm a day late on this story, but we were very keen to find out exactly what happened over the weekend. So the combined Capital's auction clearance rate for the week ended Sunday was just 55.8% from around 2,300 auctions. That's a big drop from a few weeks ago. In fact, a few weeks ago, it was 64%. Higher interest rates and the rising cost of living is clearly hitting the market. Both Melbourne and Sydney's clearance rates came in at 58%, notwithstanding there were 17% fewer auctions in each of the cities last week. Brisbane's clearance rate was a pretty awful 34%. Now, that city normally comes in lowest, but not that low. Best as usual was Adelaide at 65%. That was down from where it normally sits in the 70s, while Canberra was 51% and Perth was just 39%.
Oh, ouch. That is not a good weekend.
No.
Now, the Andrew Forrest-backed beauty and skincare business BWX has revised sharply lower its earnings for both the past 2 financial years, recorded a huge loss, and announced that 3 directors have quit.
Yes, the group owns brands including Sukin, Mineral Fusion, and Flora and Fauna. Yesterday, it posted a $337 million annual loss for the last financial year. Now, $323 million of that was due to a write-down, and that's because of the errors in the previous year's accounts. BWX put itself into a voluntary share suspension back in August. While it tried to settle its accounts, it didn't do that until yesterday. The company apologised for the delay and said the 3 directors leaving was part of an orderly board renewal. There's been a lot of management upheaval in that company. We have directors leaving. Maybe it's orderly board renewal, but it doesn't look like it.
It certainly has an air of chaos to it, doesn't it?
It does.
Sean, Australia's resources and energy export earnings face a $68 billion hit, with record LNG and thermal coal prices expected to fall on the back of a slowdown in global demand and easing of supply chain disruptions.
New forecasts show commodity prices on track to return to pre-pandemic levels as markets stabilise following Russia's invasion of Ukraine, according to a report in The Australian. That will put pressure on the national budget. But before there's too much wailing and gnashing of teeth, export projections released yesterday by the Office of the Chief Economist and Department of Industry and Resources reveal that Australia is on track to notch a record $459 billion in earnings this financial year. The big fallback from that occurs the following financial year, where export earnings are expected to come in at $391 billion. So it looks awful, that $68 billion difference, but it's coming off a record year. The report says stronger export returns could be achieved if China continues easing draconian COVID-19 restrictions and uses fiscal levers to take advantage of the low inflation and accelerate economic development. What that says, we are very tied to China.
All right, moving on to overseas news now, and COVID is rapidly spreading through major Chinese cities, leading, worryingly, to a shortage of medicines.
According to the Financial Times, residents of Shanghai, Shenzhen and other cities have reported pharmacies have sold out of fever medicine and COVID tests, while there are social media images of long queues outside COVID clinics. Earlier this month, Beijing abandoned its COVID zero policy, and, Michael, transmissions have soared ever since. Now, reliable estimates are really difficult to come by, but the Financial Times, which is obviously one of the best media outlets in the world, is quoting one statistician saying there were close to 40 million new COVID cases on Friday last week.
And finally, Sean, a not so cheery story ahead of the holiday season, and certainly not one for someone like, say, me, I'm not a nervous flyer necessarily, but I certainly don't like unexpected things happening during a flight. Severe turbulence hit a Hawaiian Airlines flight from Phoenix to Honolulu on Sunday, seriously injuring 11 people in what an official called an isolated and unusual event. It would want to be isolated and unusual.
Yeah, so I seem to remember now we're talking about this. Wasn't there a flight from Hawaii to Brisbane or Sydney about through pre-COVID 2019 where something similar happened? Basically,
yes,
I'm sure there was.
Yes.
There was over the weekend, the full flight had 278 passengers and 10 crew. Now, as a result of this incredibly severe turbulence, passengers suffered cuts, including to the head, as well as bumps and bruises, according to Bloomberg. Some people were nauseous and vomited as a result of extreme motion. Altogether, 36 people received treatment, 20 were taken to hospital. At least one person was knocked out. There was some internal damage to the aircraft during the turbulence, so it was obviously very severe. The seatbelt sign was on at the time, though some of those injured weren't wearing their seatbelt. Hawaiian Airlines said it is investigating, and we'll have to wait and see exactly what the cause of the turbulence was.
I'm a very fast Googler, Sean. And while you were talking, it was a flight in 2019, and it was actually from Sydney to Beijing, a Qantas flight. And severe turbulence, the plane dropped, and a bunch of passengers and crew members kind of hit the roof, and some needed kind of treatment, and sounds absolutely terrifying. And it is the reason why I leave my seatbelt on the entire time I'm on a flight.
The only thing is that what's comforting about that is if you hit severe turbulence, obviously you don't want anyone to get hurt, but the plane itself remains fairly safe.
That is a very big silver lining you've just found there, Sean. Yes, the plane continues to fly and everyone actually does get there safely.
Yeah. So that's how I'm going to think about that, because I'm not a good flyer at the best of times. So I think I'm better to think of it that way.
That is a great way to finish on, Sean. That's a very positive note to finish on. Up next is the Fear and Greed Daily interview with John Mayer, the Chief Investment Officer of ETF provider Global X.
Everything you want to know about exchange-traded funds last year and this coming year. Listen to it, I'd suggest.
Yes, indeed. It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 20th of December, 2022. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.